Okay, good morning, everyone. It is Monday, October 3rd. It is 9:11 a.m. Eastern Time. This is the live trade room. Let's take a look at a couple things here. All right, here are the four indices. This has all the makings of a false breakout trade in everything except the Russell. The Russell now, if this is a false breakout trade in the ES, the YM, and the NQ, then we're going to scream higher, and the Russell is going to very soon take out last week's high, and the others will as well. That's classic auction market / market profile analysis, and it lines up with the technical situation too, because we are as coiled up as you get. We're so coiled up, and it's like I put in the report, it's pretty binary. We're going to crash from here, or we're just going to absolutely rip higher. So all the ingredients are in place at the moment. You have to be leaning long. I mean, that's what this is telling you. I don't care what the attribution is or will be, but there'll be some attribution in hindsight as to why this is happening. I trade price. It can be very hard to trade price and to trust price, especially in the current environment where there is so much noise. Twitter, my email feed, YouTube, it seems like the world is coming to an end. But I can't tell you how many times over the past 38 years I have seen similar situations, and you have to learn to trust price. Now, once in a while, there'll be some sort of out of the blue exogenous event and things will reverse. That happens. There's nothing you know about that. But the harsh reality is that price 99.9% of the time is moving in the direction that it's going to continue to move in. And another thing, chart patterns are not causative. They are a reflection of what has just happened or happened in the past. But everything you see on the chart is past. And the market doesn't follow a chart. A chart is a footprint of what's going on. Now, those footprints have similar characteristics. They have similar patterns. And we can draw logical conclusions in a probabilistic manner about what has happened in the past when we see a certain pattern. More often than not, the patterns that we see on the four charts on my screen resolve bullishly. So that's the way I'm trading. Now, what should not happen? And you guys should know what I'm going to say now. We should not retrace, even though this is Globex data, we should not retrace much more than halfway down into today's session range. So depending on your facility with trading, your trade plan, your account size, your goals, all of those things that are individual to each of us, you could go long here and put your stop somewhere down in here. Now, if that's not specific enough for you, then it's not specific enough for you and you don't do it. Again, it gets back to your experience level, your account size, your facility with trading, your understanding, all of the things that make us individually, our personality, as traders. But I'm favoring longs. This could be a really, really good sharp move. I'm very cognizant of what's going on. There's some sort of Fed meeting today, and I get all that, and that will no doubt have an effect in this market. But right now, in every time frame I follow, except daily, hourly, half hour, 5 minutes, etc., we're making higher highs and higher lows. So I want to be long. That's the side that I'm going to be trading. I'll tell you, another market you may want to take a look at right now are notes and bonds, because they're coiled up in a balance area, and that's going to be a sharp move too. So there's a lot of stuff lining up here to present some opportunity. So it's Monday. It's October. New time frames all the way around. So let's see what happens here, guys. Okay, 9:35 a.m. Eastern time, and we have the usual opening noise. We should stabilize. The line in the sand here to me is going to be the closing yesterday or Friday's close. Ideally, you'd like to see this gap hold. That's at least occurring in the. Here, let's do this. Let's go to this, and let's go down in time frame. I'm going to 5 minute. So you can see there's still a big gap here. This is Friday's close. Let me get this thing right. Now, you want to see this thing turn around, obviously, under a bearish case sooner rather than later. It's not too surprising to see the noise. That's typical. At this point, I would still be favoring long trades. Now, on the super short-term charts, you really don't have higher highs and higher lows yet, but dare I say this, expecting that to occur under a bullish assumption. Okay, we've clearly traded lower in this early period. We're only 11 minutes in. It's 9:41. I'm still biased to the upside. Now, I can't take a long trade. I'm long. I got long in Globex. I can't add to that trade unless I see higher highs and higher lows. And I don't at the moment. Now, I'm not, I would like to have seen this thing open, maybe come in a little bit, not retrace as much as it has, but it's a skittish market. I'm still biased to the upside at this moment. Breadth is okay, but it's too early to get a good read on that. So. Okay, it's 950. You got to be long or flat. This low is important. The cash session low is important. I'm not going to, I don't tell people what to do. I don't give investment advice, all that, all the disclaimers, but it would not be an unreasonable swing trade to place longs against today's cash session lows. Okay, it's 9:55. And Molly, you there? Okay, I'm going to read your question. Just like price action in all four indices, is there any merit in looking at breadth in all four indices separately? There could be. I don't do that. I don't have the data for the other indices. I mean, I think you can get it, but I don't have it. I find that the indices are so highly correlated that, I follow the NYSE stuff very closely, the breadth, and then price action. I do closely follow the price action among and between the indices. And that's, I find that that's adequate. You can parse this stuff out to the point that you go down so many rabbit holes that you're looking at so many things that you're frozen. So I watch price action. I look at the relationships among and between the indices primarily. That's number one. Then I do look at the technicals. That would be like 1A. especially when they get extreme. And they're at an extreme now. Okay, I don't know what that was. I guess it's some number. Who knows? But at the moment, we have conviction to the upside. I'm biased alongside of this market. Don't want to see this come out. This 5-minute bar come out super short term, but this if this thing gets going, it is absolutely going to scream higher. But I warn you guys about trading a narrative. So this is sort of note to self. If price action turns around here, I'm going to be out regardless of what other stuff I'm thinking. I trade price action. Okay, 10:02. I'm sure you guys are aware of this, but somebody just posted that it's ISM manufacturing and it's weak. And trading is this bizarre world. So if you're long, you're hoping the economy is crashing, so the Fed will ease. It's just it's bizarre. Trading is bizarre. Okay, 10:06 a.m. Eastern time. I mentioned that note trade earlier. It's taken off to the upside. So those of you that trade that contract probably can be long against about 112.20. Ionis, you there? Okay, it's 10:29 a.m. Eastern time, and you say above 36.85 elevator shaft. No, we're trading back in at the midpoint of the range, this balance area. Now, on the other hand, when you get in an elevator shaft up or down, you're expecting and you're alert for acceleration. We're sort of in a similar position now because this looks like it's a false breakout trade. If it's a false breakout trade, then we're going to see last week's highs by, I don't know, Wednesday. In the meantime, dead ahead is Friday's session high. There could be a little pushback there, but breadth is really strong. It's sloping higher. So this could be one of those really wide range days. Look at the Russell also. Now, above last week's highs in the Russell, you are in an elevator shaft. But you're sort of alert here that the condition is in place like it is in an elevator shaft, but it's different because this is a false breakout trade. In an elevator shaft that would be above last week's high. If we get above last week's high, you're in an elevator shaft. But you're looking for the same thing here. There are reasons to believe that we could accelerate higher immediately, and it looks like we're in that process. So from any time frame that you trade, from swing trading to short-term trading, you're either long or you're flat. Okay, 1031 notes are absolutely screaming higher, notes and bonds. Guess 1032, another contract. The dollar is on its lows and it's testing Friday's lows. Now, if you're short the dollar, you're long notes and you're long stock indices. That's a really highly correlated trade, just FYI. But if the dollar gets below here, you talk about an elevator shaft. It's an elevator shaft down to around 109. Okay, it's 10:31. Paul asks, on the cash chart, there's a gap above 29th high. Does that have any significance? Yeah, these gaps tend to close, but again, I think that's more because of rotation than it is any sort of magical pull to a gap. However, that said, people do watch that stuff. So yeah, but getting back to, I do watch stuff like that, Paul. Okay, but all I have to know right now is really on my futures charts, and that's, the Russell is above its high volume node of this extraordinarily mature balance area. The other indices are acting like this is a false breakout trade. So short-term price action is up. You got to be long or flat. (10:40 a.m. Eastern time). Peter, you there? Okay, great. This is a really good question. Peter says, I don't understand what chart features that indicate false breakout trade. NQ is far from yesterday's high, others close to yesterday's high. Okay, good. Okay, that's fair. Let me show you. Very good point. Let me. Now, this is a basic auction market trade, okay? So what happens is when you don't always have it, we all know that, but you have this balance area, and this could be any time frame. This could be a 5-minute chart, it can be a multi-day chart, it could be a monthly chart, where you have this Gaussian shape that forms, okay, like this. And then what inevitably will happen is you'll break out. You'll have the extremes. This will be your lower extreme. This will be your high extreme. And what will happen eventually is you're going to get an excursion above the high or below the low. And when you get that excursion, this is the beginning of an initiative break. And that's your assumption, whether it's up or it's down, because it's that auction process that follows consistently where you have a migration of value. So if the market is going lower, you're expecting the breaks to be lower like this, like this. And the inverse is true. If you're expecting the market to go higher, you're like this, like what happened here? This, etc. So you're expecting your migration of value to go higher. Now, when you get when your assumption is, it is always the smart thing to do, the highest expectancy thing to do is to assume the market is going with the break out of these areas. Now, I would say, I don't know, and I'm guessing, okay, maybe only about a third of the time does it work this way. Okay, whereas you just get this really nice clean break and it just continues to do this thing. The other 2/3 of the time, it's either it wallows around and it comes back up in here and it builds more balance, and then but a percentage of the time, and this is one of the highest probability trades in auction market / market profile, the market will attempt to break lower and then it trades back. Well, that's a really good. Well, I've got the wrong tool. Hold on, bear with me. So the market attempts to break lower and it can't. And then it reverses very sharply. And when it gets back up into this range, there is an increasing probability that it is going to retrace this entire range in a fraction of the time it took to create it. This is in my books. It's in trading courses. This is one of the most consistent and highest probability patterns in this whole stuff. And it's true even on a 5-minute chart. And maybe I'll do a webinar just on that stuff. Now, okay, so you say you don't see it on the chart. Okay, that's fair. Let's take a look and see what we see. Okay, so the difference here at the moment, the Russell is still in its balance area. And we've talked about that. That's a divergence because it never took out its low. But what about these others? Let's do this now. Let's go to, let me get a drawing tool. So this was a balance area that formed. And it formed here. And it formed here. Now this balance area is still, the Russell hasn't broken out of its balance area yet. But what you see here, and here, and here, on Friday, we attempted to break lower out of this balance area and it continued in the Globex. Well, that's failing. So this is a false breakout trade. It's a classic false breakout trade in progress. Now, it ain't over until it's over, but everything is pointing to this being a false breakout trade. Okay, does that everybody understand that? That's a very, 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 very important thing, basic thing to understand. I get that this stuff can be fuzzy at times. I totally understand that. But there's certain times where things are quite binary. And this is one of those times, and the weight of the evidence is strongly on the side of a false breakout trade being in progress. And if that's the case, this market may be up for the next several days. Oh, okay. Hold on, Peter. You want to see it again? Is this what you wanted to see? Okay, it's 11:05 a.m. Eastern time. And let's talk about what's going on here. So we have, my assumption is that we're going to have a bullish resolution to today. I want to be biased to the long. I am biased to the long side. I'm only trading. I'm long. Will only be managing that long trade. and I'm running fairly loose stops. I have my stops well above break even, but I'm going to give this thing some room. Now, what do I not want to see happen? So this is how I look at this. Okay, what I don't want to see happen, what should not happen under my assumption, is we get this super wide range bar to the downside. That's sort of a subjective term, but I don't want to see the equivalent of this down. Now, if we sort of rotate and we sort of orderly chop lower and we hold moving averages, that type of thing. But if you get conviction down now, that's a heads up that something may have changed, and the big money is nervous, or they've gotten a information we don't have yet. I don't want to see this. That would concern me. The other thing, clearly, I don't want to see this thing begin to form a series of lower lows and lower highs. And as a rough guideline, the moving averages should hold any decline. There's a lot of conviction in this 5-minute bar. Probably don't want to see, worst case, this level taken out. If we trade down to here, the market is going to be at an important make or break level, in my opinion. Okay, it's 11:32 a.m. Eastern time. Everything is in lockstep, higher highs and higher lows, pretty much across the board, consistently. The market is from an option perspective, it's in negative gamma. And when you see moves like this, a lot of times they'll be exacerbated because of dealers having to stay delta neutral against their option positions, which means in this instance, the higher the market goes, the more they have to buy futures to hedge their position. That's the short of it. That's an oversimplification, but I think it's pretty accurate. Breadth at the moment is plus 2,300. It has just been relentlessly higher all day so far. Now, some fluctuation in breadth during the day is not unusual. You certainly don't want to see breadth take the big nosedive. I don't think it will do that, but it's always something I keep an eye on. The day has the potential to be that extremely strong up breadth day. Of course, we will review all of this at the close today. If you're wondering what is the potential for this trade, the potential for this trade is multi-day. Now, the next time we're sort of in the middle of nowhere, where we're back into really all that balance area stuff. Now, on the other hand, and this is the market that has sort of been the canary in the coal mine, the Russell is trading well above its high volume node. The next level in the Russell is last week's high. Here, I'll just show you because this is really important, in my opinion. The next test, in my mind, of the bullishness of this market is when the Russell, if and when the Russell gets up to last week's high. I wouldn't be too surprised to see some pushback here, because you want to see the Russell close above this 1733, 34, 35 area. And you certainly want to see the other indices continue to follow through. Now, I can also see a scenario that is entirely plausible under the false breakout idea that I'm certain that I feel is in play, where we gap up tomorrow and you see a big gap, and then the Russell screams above this level, and then you have the indices testing or taking out last week's high. So that's sort of what I'm looking at now. Does that help you from a day trade perspective? Not particularly, except it helps me. It gives me my bias, and it helps me with my trade management, because I think this trade could very easily carry over into different time frames, and I'm trying to give it room. I'm comfortably profitable. I have my stops well above break even, but I don't want to get too twitchy managing my position, and give it some room to breathe, because again, there's a more probability at this point that the market gaps up tomorrow than it gaps down, which has not been the case recently. And of course, we will review all of this at the close, but that's the way it looks to me at this point in time. Now, the other thing is, we have a pretty healthy range, especially in the Russell and the YM, but so the rate of change that we're up now may slow. It may get a little choppier this afternoon up and down, but I would still be biased in that chop to the upside. Okay, it's 12:27 and we've entered churn and burn mode. The algorithms have to feed, and this is going to be a feast on Twitch traders trying to trade 2 ticks up and down. Okay, it's 12:51. We're in an increasingly tight, almost 15-minute balance area forming in here. A break above here is a good long trade. I'm not going to take the short trade. If you want to go short, you can short it below here with a stop here. If we do break this level, it brings this into play, and then a break of this brings this into play, in the interest of full disclosure. So, taking the break of this would be a legitimate trade if it breaks to the downside, but your stop has to be here. And, I'm playing the path of least resistance based on larger degree structure at the moment. Okay, this is going to be an interesting test of these highs. We've been in a chop, which is not a big surprise. Those of you that are familiar with Don Jones' work, this is run, pause. Basically, it's the 3-step process of development. You have an initiative break, you have balance, then you have another initiative break. Now, the line in the sand, in my mind, I don't want to see this level taken out down here. Especially this time of day. And if this is a real kickoff, you want to see these highs now taken out, and you'd like to see another leg up starting. If you look on a 30-minute chart, you look on your shorter term charts, you want to see this thing break out to the upside here. You don't want to see it below about 36.58 in my mind, because if you get below 36.58, that doesn't mean it's a sell, but it brings a lot of stuff into the equation. Let's put it that way. Right now, it's pretty much today has been unequivocally bullish. If we got below that 36.58 level at this juncture, and Brett takes out its low of the day, Brett sort of waffled. It came in. Don't want to see Brett below its low of the day now either. And eventually, you want to see it testing or making higher highs. Now, it's sloping higher now, so that's a net positive. Okay, it's 2:25 p.m. Eastern time. Don't think about shorting this. Could we have a air pocket of 10 or 15 handles down? Yes, but that's not the trade. If you're not in this now, the reward to risk is not real good, long or short. We're very extended on a super short-term basis. But if you made me take a trade here, if I were not in a trade and you made me take one, I'd go long. If you're long, enjoy the ride, try to grit your teeth and see if we don't close on the high of the day, regardless of what happens in between. An idea for managing your trades, and you need to start thinking about, okay, am I going to carry this over into Globex for potentially, more to go? From a swing trade perspective, from a structural perspective, we should be up tomorrow, and we may be up tomorrow something similar to today, frankly, because so far this is a classic false breakout trade working in the ES, the YM, the NQ. The Russell has not yet technically broken out. So if it breaks out, that implies immediate acceleration there. So there are reasons that to consider taking part of your position overnight. If you are just a strict day trader, you're never going to take something overnight, then start, maybe take some partial profit here, start trailing your stop. If you're just a day trader, this level, this last little pivot low, just ratchet up your stops below these little pivot lows. Okay, it's 2:32, and I was just looking around, and man, I missed a great trade in gold, and so did you if you didn't take it. But I've had my hands full this morning. I'm in notes, the dollar, indices, and gold has been highly correlated with those lately. But guys, that was another really good trade. Okay, it's 250. We just had an algo sweep of latecomers. Widest range, 1 minute bar today, maybe. So bizarro. Now watch them retrace this. If they do, it's probably a buy, frankly, but your stop has to be low of this bar. I'm looking on a 1 minute chart, but it's same thing on a 5 minute chart. I mean, this range was in about 30 seconds. Okay. This is Tom Alexander. This is the live trade room post-cash market analysis for, what's the day? Monday, October 3rd. And it's been an interesting day. We have a lot to discuss. I strongly encourage all of you to go back and review this weekend's report. I tried to give a very measured view of a bullish case and a bearish case, but with a very, very strong feeling that the market was going to move sharply in the cash session, and that would be important. And that certainly has come to pass. This has been a textbook, real-time case study in the stuff that I use to trade, the stuff that I teach you guys to use to trade. Now, like anything else, it's not magic. At times it can be fuzzy. At times it gives you false signals, etc. But if you guys that have been with me for years know I'm certainly consistent. And we came into today in a situation that was about as binary as it gets in trading. The market was going to crater or it was going to scream higher. And at the moment, it is screaming higher. Now, that said, if this is indeed an important low that we've just put in, tomorrow should follow through. And I wouldn't be too surprised that if indeed that's an important low, that we don't gap up in the night session. But that's sort of my narrative. So when I have a narrative, I want to go back and say, okay, Tom, that's fine. But what if you're wrong? Where are you going to have to be forced to reassess your thoughts about this, and where you're going to be forced to make some management decisions regarding trades you have on? And for me, and this again, I'm very consistent. Today's a wide range up day. We're going to close in the neighborhood of the highs of the day. We really shouldn't retrace very deeply into today's range in the cash session. Certainly it would be a heads up if Globex reverses this entire thing. So I will, in my futures positions that I have on, I will adjust my stops accordingly and will not let them, well, they'll be profitable, but I'm not going to let them go below the midway point of today's session range. That should not happen. So regardless of how strongly I feel about what might happen and could happen, regardless of the rigor of my analysis, as a trader, I have to know and I have to plan for being wrong. Because first and foremost, the way you want to think as a trader is risk control. It's not about, oh, this is the trade that's going to make me rich, or this is the trade that's going to make my week, month, year, whatever. You know, it's about risk control. You control your risk and over time, you'll be fine. Okay, so with that said, let's do a little bit of a review of the things that we discussed in that report this weekend. Okay, here are the four primary U.S. trading indices. And what has not happened that has to happen is the Russell. The Russell has to close above this high to confirm an initiative break higher in the Russell. If that's confirmed, if that happens, it's very likely these will have traded or these ultimately have to close above their respective balance area highs as well. Okay, but if the Russell does that, that's good evidence that these will follow through. And again, what should not happen now, the big surprise would be if somebody says something between now and the cash opening tomorrow and this thing craters, retraces. Now that, don't expect that to happen, but I've certainly seen it happen. Regardless of how sure I was about it going in one direction or another, it can do the exact opposite. So that's my fail-safe. That's my risk control. Now my analysis is still, I have a bullish scenario. That bullish scenario so far appears to be playing out. That's all fine and good. What is the potential for this trade? Well, I'm just going to take one contract because if it plays out this way in the ES, it's going to play out in the others. What's the potential for the trade? Well, somebody mentioned today about an elevator shaft. Well, we're really not in an elevator shaft yet. If we get above last week's high, then you're in an elevator shaft up to here, this area. Because this was just vertical down all the way down to here. And then this was the stopping price. We developed around that price. This is classic auction market stuff, market profile stuff. Now, you will have a lot of people, a lot of the market profile people, hammer and nail This is a high volume node, so they'll be looking at this area. But again, this was conviction down. So to me, it's the top of this bar, and you've got a cluster of daily highs here. That's far more important than the nebulousness of this volume node in here, particularly when that effectively has been erased by this conviction. So if you do get above here, close above here, now I don't think we'll go there in a straight line, but we could go there very quickly. I mean, if you look at, well, I'm curious. Let's just see something here. So this was quite the bungee jump here. And so from this low into this high, the market moved 8.5%. And then we had pushback. Well, if we were to rally 8.5% here, well, you'd be up into this area right here, ironically. But I would still, to me, this is the more important level. But just to show you, just a run-of-the-mill bungee jump would carry us considerably higher than we are now. And let's just, again, just for fun, this was another leg up, and it carried almost 8%. This was another leg up. It carried 7%. So you get the gist of it. Today, while today was a wide range day, it's a blip in the bigger picture. So there should be, under a bullish assumption, more to go. Let's look at the technicals. Let's see, where are we? Here we go. Okay, VIX came in today, which you would expect, but it's still hovering around 30. Now, if VIX really begins to drop in earnest, this thing will scream higher, similar to what it did over here. So this is actually, it could be considered, if the market continues higher, VIX is certainly going to drop. It's sort of a chicken or an egg thing, but there's a lot of room for VIX to drop just to get back to 20, which is considered a relatively high level historically, incidentally. Okay, back to breadth. And again, this is a potentially bullish picture, especially based on the 10-day moving average of advancing issues. It's already reached, it's just back to what would be an extreme downside level after diverging rather dramatically over the past few days. That's not really the one I wanted. Let's get that. Hold on. So, again, you can sort of make a bullish case or a bearish case here, but the bullish case is that this divergence at this low, this could be very bullish. I mean, very, very bullish. And this is that level identified on the futures charts. Above here, this is the cash chart, obviously. Above here is your elevator shaft all the way to this level. And that would not be any sort of super outsized move, maybe 9%. So, guys, have a most wonderful evening, and we'll pick up the battle again in the morning. Thank you.